campaigned on. It had more stimulus spending than it had in cuts, and an indefinite and infinite increase in the debt limit, like forever. Now, 4 days ago, we offered a serious proposal based on testimony of President Clinton's former chief of staff. Since then, there's been no counteroffer from the White House. Instead, reports indicate that the president has adopted a deliberate strategy to slow walk our economy right to the edge of the fiscal cliff. Instead of reforming the tax code and cutting spending, the president wants to raise tax rates. But even if the president got the tax rate hike that he wanted, understand that we would continue to see trillion-dollar deficits for as far as the eye can see. Listen, Washington's got a spending problem, not a revenue problem. If the president doesn't agree with our proposal, I believe that he's got an obligation to families and small businesses to offer a plan of his own, a plan that can pass both chambers of the Congress. We're ready and eager to talk to the president about such a plan.
Speaker, you did speak with the president earlier this week. Can you characterize that call? I mean, if he called, did he have any kind of counteroffer? And also, we understand that he just is making clear that it's got to be increase in rates for the wealthy or no deal. Are you willing to give a little bit, maybe just not all the way to 39.6?
It was, the phone call was pleasant, but it was just more of the same. Even the conversations that the staff had yesterday, just more of the same. It's time for the president, if he's serious, to come back to us with a counteroffer.
The jobs report today indicated that unemployment is down roughly a full point from this time last year. A lot of folks in the business community say if no deal is going to happen, it could obviously hurt American jobs prospects. You always say, where are the jobs? They seem to be coming along. Why take such a risk when the jobs number is improving?
Well, because the risk the president wants us to take, increasing tax rates, will hit many small businesses that produce 60 to 70% of the new jobs in our country. That's the whole issue here.
What would it take?
You violated the rules. Sorry.
Mr. Speaker, the Treasury Secretary of CNBC said the president is absolutely ready and prepared to have the economy go off the cliff if he doesn't get higher income tax rates. What's your reaction to that?
I think that's reckless talk.
Before the election, you would be able to prevent tax hikes on all Americans. You just said flat and taxes are not going up. Do you still believe that to be the case?
Listen, raising taxes on small businesses is not going to help our economy, and it's not going to help those seeking work. I came out the day after the election to put revenues on the table, to take a step toward the president to try to resolve this. When is he going to take a step towards us?
Can you see some way that you could agree to tax rate increase and protect small businesses at the same time? Maybe going with the 37% or some middle ground on rates?
There are a lot of things that are possible to put the revenue that the president seeks on the table. But none of it's going to be possible. The president insists on his position, insists on my way or the highway. That's not the way to get to an agreement that I think is important for the American people and very important for our economy. Thanks.
And with that, there we have the counter thing from Mr. Boehner there, the Republican chairman. And once again, we have the same thing. And the same thing is this. They're not getting the counteroffer the right way. This strong arm, my way or the highway, as the man said, is not the right thing. It is the month of December when stocks are supposed to be doing well. One of the things I can tell you is that the European model, they already went down that road in France, Europe, and Britain. They had raised it. It failed in the tax rates because it choked off their growth over there. They've already, and why are we adapting failure policies? Why do we want to adapt something and put in the same, almost identical things that happened in Europe when they did their big, I want to tax my way out, I want to tax my way out? Listen, it didn't work. There's proof it didn't work. And they had to get off of that kick. And the thing about it is that the economic numbers that came out today on the unemployment, there's a way that they're calculating those things these days that aren't even counting right. Go to the Labor Bureau of Statistics. The bottom line is this. No deal. And the policies moving forward in calendar 2013, the way that they want to do it, look at, we already have proof. We already know what the CBOE said. We know what Ernst & Young said. Ernst & Young is one of the biggest accounting firms in this country. The CBOE already knows. They've done their numbers. I can tell you one thing, that we need to do a lot more. It's a very simple, easy, step-by-step process that would work, and a lot of people just don't understand it. That's okay. I will tell you when you will understand it is when you are going to be paying the consequences for the things that are happening, and you're innocent to all of it, but you, once again, you're the ones that voted for it. So my point of it is that taxing your way out is not the right thing. Small businesses will suffer. It's already a $900 billion headwind. And it is true that the smaller entrepreneurs and small businesses, they're the ones that do the most hiring. It's just not a good recipe right at this moment. We'll be talking a lot more about how the U.S. could follow Germany. Is already in a mild recession. I believe this country's been in one since the summer. Since August at least. A mild. Not big, but you know, ISM numbers have come down. Look at the stimulus is in QE3 and Twister and all of that. Make auto sales at cheap rate money and people going out and buying it. Who doesn't? They entice people to go out there and do that. Buying houses down at the lower end of the market because of QE3, but those rates are going to go higher next year. And inflation is going to be a problem. The thing about this whole video right here is having it on record, having it on the tape, how to be able to decipher it, how to be able to know which side is right, which side is wrong, how it's going to affect your investments or intraday trading moving forward, and how the financial services industries could go down the tube because of it.